right? So let's look at the summary. Let's quickly look at the summary of trading. Okay, either forex, crypto, synthetics. But let's look at the summary of your trading activity. So in forex trading summary. First, you wake up in the day, you look at the fundamentals. All right, so let's quickly go. So looking at your forex factory, you're going to look at the date. So today is 24th of March, 2025. And are there fundamental news that are very, very important? Of course, those news that come with a red envelope that are very fundamental and strong. So you have this by what time? Nigerian local time. That's going to be at 1:45 p.m. local time, all this news. So you want to pay attention to that. Okay? They're not too critical, all right? That are the known fundamentals that you want to look at. Okay, but you have to look at them. The impact of those time have a lot of effect in your market. Now, so if that is established, you want to go to your trading chart. Remember, we said your trading chart, first of all, you want to go to daily time frame. And also your daily time frame, you want to look at the candle pattern. And of course, you have drawn your key levels before, right? Your key level. So see, I just drawn a channel. So I draw a line here. So look at it. Now, just to see the diagonal trend line to kind of form a support and a resistance within that zone, which can be some liquidity area. So what I did here is this. I just cloned this, right? And then move this down here just to form a channel. Okay, so form a channel. And now I draw a counter trend line where the market actually. Now, so you're going to go to 4-hour time frame to check more of the direction of the market. Of course, you know, this is a downtrend. I'm going to the direction of the market. Here we come. So what you want to check, of course, there are a few things you want to check that are very, very important. Of course, this is a key level. So this is sub key level of 4-hour time frame. This is a liquidity zone. Now, why do I draw this? I just draw this as a zone, 4 hours resistance zone. Now, where you are right now, the resistance zone, this market, what if this market popped out and returned back below this point? You want to see a change of the market direction and you want to short the market. So for Bitcoin, right? So if the market prop up and break this and of course close above this, you want to look up to the key level. And then you have several kind of liquidity areas that the market can go to grab and return down. So you want to buy. Now, can I jump into this now? No, you don't jump into the market that's already moving very far, right? So you want to see some problem in it, pull back, then you want to find an entry. Now we're going to go to 1 hour, right? So it's the same thing on 1 hour. So the trend, of course, look at it practically. You know that this is an uptrend, right? So the market, this is swing low, it's swing high, it's swing low, it's swing high, it's swing low, it's swing high, it's swing low, all right? This is already taking off this. But you need to break structure properly. And once the structure is properly broken, then retested, you want to find an entry. Now, where will have been the best time for anyone to have entered Bitcoin today? That will have been an average of about $85,000, right, before it got up here, right? Yesterday, there was so many area of entry over here, and then over here, right? So now, the more practical entry most time for swing trader, you want to look at 15-minute, right, confluences to find an entry, right? See, continue to rally it up because you've already seen that it's an uptrend. And now from here, you will have found an entry and all of that. Now, when we talk about indicator, we said they are just to support your bias, okay? So you see, this is MACD, it's above the zero level, and then do what it's doing. Look at RSI, it's above that and all of that. So sometime you now want to enable your moving average for trend, right? So moving average for your trend, let's go here. That's turning 1 EMA. So look at it. Now you are above 200 moving average, you are above 50 moving average. So that gives you an edge to say, okay, we're good. So look at it. There's a pullback, continuation, pullback, continuation, pullback, right? 15 minutes. This is another pullback ordinarily, but you are at a liquidity zone. Can we sustain this? So once this is not sustained, so what you want to look at now is very simple. This is the low that make out this high, and then we have a high here. So you want to see this taken out. If this one is taken out, and of course gets stopped, then you want to be shorting the market back to this. These are another liquidity on 15-minute time frame. These are another liquidity and all of that. You get back to the key level. So that's why you don't just jump into the market you want to buy. If you go to 5 minutes, so 5 minutes, the same thing. So on your 5 minute, because you are in uptrend, so you want to find the market return back here, but still very critical, which is this point. I see these are diagonal trend line with drill, and then you want to find the market returning back, right? So to break this, once you break this and retest, you want to find. So getting to a key level, that up or down, you have to watch it so that you don't become victim of those areas. They're very, very important. Okay. So markets. So like I told you, if you are using your 50 moving average, when the market pull back, can pull back to the 50 moving average, you want to find an entry, market pull back, and then create an opposing candle with the first one. Then when it gives an engulfing, then you want to find an entry to exactly when you are with the trend. Do you understand? So sometimes it can come back. Sometimes it can come back massively to 200 moving average itself. So you are just using as a confluence and a support for your trade. And that's exactly what we say. So irrespective of the instrument. So for those of you who are trading futures, so these are cryptos that you use in trading futures, right? So the same thing. Look at Solana. You're going to find similar, trend or activities around it. That's exactly what we point out. So let's quickly look at it over here. So look at Solana, right? So this is a low, this another high. So until this low is taken out, and then retested, then you are taking interest to actually want to short the market as it were. But let's go back to 1 hour. You'll see that, okay, it's an uptrend, right? Oh, good. So it's an uptrend and all of that. Perhaps you didn't have some key levels drawn here. So because not all the market actually at that time to draw the key levels as it were, right? So this is Ethereum. Oh, good. Look at what Ethereum 2 has done. Very good, massive pullback. Okay, oh, the Ethereum. Okay, yeah. So you can see not returning to only 50 moving average, but to 200 moving average. Then market continue. Then this is a massive breakout heading to a key level, right? So from key level to key level within this region. This is 1 hour. So go to 4 hours. Okay. So this is 4 hours. So why we love 4 hours point is very, very key to you. Now, this is zone to zone. From this zone, markets turn touches 250 moving average. See, this is a downtrend because now, so you're looking at this point, we are going to be rejected or it's going to be broken, and then you are facing up again. That's exactly what you're doing, in the trade. So I was on gold. Okay, oh, sorry. Let's look at chain link, right? So you can see chain link now. Chain link I've gotten to a key level. So chain link I've gotten to a key level is 4 hour time frame, and chain link is exactly at the key level. So the reaction of chain link at a key level is very important to you. You rather wait and see chain link break and retest above this, then you are finding your way up. And even if finding your way up, look at another level of liquidity here of 4 hour time frame. Draw that zone out. That's the place you'll be targeting if you find an entry eventually, right? That's from key level to key level, right? So That's exactly what you're doing, while you're trading. You can see now that Bitcoin, see now the reaction, instead of continuing to move up, Bitcoin is reacting at that level of 4-hour time frame. You get it now? Okay. So that's for crypto, So once you're able to find, you wait patiently. Let the setup give you proper entry before you jump in. So you don't just, oh, the market is bullish for that, just jumping in and all of that. You have to be very meticulous, right? So this is a key level. So at this key level, what's going to happen? Will it break it? All right. So that's what you're saying. Will it break it? So you can see this is 15-minute time frame. If you are intraday trader, you'll have used 15 minutes, find an entry and all of that. If you're a day trader, probably are using 5 minutes, 1 minute, because every trade you open, you look at it, where you open from, you check it from key level to from liquidity zone to another liquidity zone. So then you can use 1 minute equally because you were, but that's more for scalper. Scalper probably want to find all of those levels, 1 minute. But a day trader, find an entry 1:2, and all of that. Then look at it as at 3 a.m. Nigeria local time, as at 6 a.m. Nigeria local time, as at 8 a.m. Nigeria local time. So for me, will I enter this trade? Perhaps no, because I'm approaching key level. So I'd rather wait for the key level to be broken, then retested, then can now push up to that level. Did you get it? And so trading is not difficult the way we think, but we make it difficult because we want to catch every moment. You can't catch every step. You can't catch every move of the market. Market will always do what they want to do. So you get what you can get and let the rest be. So trying to catch every time, every move in the market is where the problem comes in. So you can't catch every moment. You can't catch every move of the market. The market will always be what they are. And so market cannot be controlled, right? But can be studied to understand. So you study to understand the market trend, where it's going and all of that. Then you leverage on it, take advantage of the market movement. So trying to control the market, no. Control your money, control yourself, control your emotion, but not the market. The market is uncontrollable. You only study to understand the market and take advantage of it. You can see Ethereum start the breakdown. So you remember what we say we trade, support and resistance. The market move up here, then continue to move. So you have a support here, you have a support here. So if I go here now and mark this guy out here, right? So what you have is that he grabbed the liquidity and returned back. After grabbing liquidity, return back. That's your entry. That's around 2 a.m. on Nigerian time. Then he broke again. Look at here and retested at about 3 a.m. again and took out and then break structure. Come retest about 5 a.m. Come break retest about 6 a.m. Right? Broke again. Then a little pullback continuation. Now this is a pullback. For anyone who was following it will have found an entry. And probably where should he be target? He will be targeting up here. Now the question you ask me, okay, Felix, can I not just find an entry here? Well, if you can take the risk, why not? But those are not the thing you want to do because you want to have find an entry after the breakdown, right? So let's say, okay, let's say you even found an entry here. Then your stop loss is below this swing, or let's take your stop loss below this. This is less than. So is it up to 1:2? Yes, about that. That means you're targeting the key level, right? That's about 2% plus. Yeah, it's fine. That can be an entry for you, probably if you want to get that done. Okay. So, like, can see Bitcoin. Now we said that's a key level, right, for Bitcoin. No, that's a liquidity area. So at the liquidity area, what's going to happen? This is the high, low that created this high. It needs to be taken out. Now, most time, people want to find that this is taken out, break another structure, then before you can actually find an entry. But sniper entry traders probably will have found an entry. If you go to 1 minute, for instance, sniper entry traders will have found an entry. How will he have found an entry? Very simple. Look at it. He has gotten here, right? So this is the major low, created this high. So this took out this right? So this was taken out. So let's extend it out. So now this was taken out and a pullback, never got back to this, right? So taken out, a pullback. So and then continue. This is break of structure, but this is the one that took out this. This is the one that took out this. So this structure was broken here. So this, most people want to see that two structure broken now. So this failed at this point, and then the entry was here. Now this entry here, these are scalpers. This entry here, the stop loss can still be above this point. That's about 0.25. Then it's going to be taking profit at the point you said you want to break, probably before that point. That's about 1:2 point something percent, right? So he would take the first profit there and allow the other ones to actually run and be scaling the whatever, scaling the trailing stop loss. So continue to trail the stop loss. Look at it. What it's gonna do. So once this is broken and retested, it's now be extending to another point, which is another liquidity area, which is coinciding with 200 moving average. You getting it now? So that's how some scalpers, but of course, you should have been in the market to see how the market is moving for you to be doing that. Not that just jump in, jump out all of a sudden, and so it can hamper your activities. But look at it now. This is now at 50 moving average. What's going to happen? Unless this is taken out, we're going to 1 minute, we'll have prompt the person to find a little entry, as it were. Okay, so that's for crypto. The same thing applies to Forex. The difference is in Forex is that you first of all go to check those fundamentals, and that's just the major thing. Every structure is the same everywhere. Now, then of course you stack. Now, stacking is DCA. You DCA into the market. Okay, see that this guy now say you find an entry, right? That can continue to run all of that. So look at gold. I think gold pulled back to 200 moving average. And so these are an uptrend. This is 5-minute though, right? Down, up, down, up, down, up, down. Then I want to make an up. Will he make it? Let's get some confluence and all of that. So let's look at 15-minute time frame, right? So this liquidity is actually here. Liquidity is here. So can he break those liquidity? Okay. Okay. So this is 250 moving average, all of that. Okay. So Ethereum, we said, can buy. So let's say a person is running a trade, go to his account, enter a trade like where we put the stop loss. I've accepted that, okay, I agree to lose whatever fraction that's going to happen, right? So for Forex, so let's say, let me open, check if I can see an account. Okay. So there's already, all right, this 5 minutes, there's already bearish divergence with MACD, right, on Bitcoin. So let's look at gold now. Okay, look at gold. We got support at 200 moving average. Let's look at 15 minutes. Yeah, at 550 moving average. What's the overall trend? That's the first thing you probably will have checked. before stepping down to lower time frame. Okay, so but let me find an entry like this. Okay, so here's gold. Then perhaps if I find an entry here, I may want to be looking at so maybe looking at this point. That is 30.30. So let me take up and go to take profit. 30.30. Okay, that's about $44 if you get there. You know, this is an impromptu kind of trade, which you don't need to do. You plan your trade before coming in because we still have liquidity. These are liquidity area. So that is to say, this guy have chances, probability of relocating down to this point, which is 3013. Okay, 3013 before pumping up. All right, so that's one of the things. So following your trade, following your direction, working with your plan. You can see, let's go to the right, this. So Bitcoin, I have to watch this one. This one is taking out all of that. So that's the summary of your trading. So every time you come into the market, okay, probably let me go to synthetics. All right, so let me go to synthetics. So using well trade. So this is well trade. So go to my chart. I already have my chart saved. So I take instrument, let's say gold flips 2. Wow. I think this was a key level, if I'm not mistaken. Let's go to 4 hours. Was it a key level? It was a key level. Good. So you can see the market got to key level. Now, I've been rejecting and rejecting over and again. So let's take a trend line on 4 hours. Also, can take it this time around to this point. Because this has been struggling to break, was not breaking. So you want to see a break and retest here. Though we tend to say these are liquidity area. If we go this way, so let's go this route because that was the earlier time. It broke, retested, and all of that. I think at this time, it's getting that to break as it were. So I'm going to save. So all of these are liquidity area. So let's go to 1 hour. So fantastic on 1 hour, right? So key level to key level. Can you come down to this key level? So now support your bias. With your indicator, so let's go to 15 minutes. Now, when it has to do with this guy, instrument like this, we trade with 5 minutes, 1 minute, and all of that. You will have found an entry earlier, right? Using your candle chart. These are displacement. Okay, which area do we have now the market to return back to? So down this point. So you are checking point to point, which is a potential support. Can I still enter this trade? Maybe no. It's already gone far for me. If you are entering it now, you're just gambling now. You see now? So even when you look at your RSI cross, this is your key level. So these are confluences. Okay? So let's take another instrument that can give us what we're looking for, right? You missed this, you would have been in your stop loss above here and all of that. So let's go to flip 3. Okay. Sometimes I get be careful with kind of the market you're looking at. So let's look at on 4 hours, probably to see much main structure where you can say this market need to get to. To 3, this is not really encouraging for me. I think you needed to, are you in a downtrend or in an uptrend? All right. Oops, yeah, yeah. So it actually want to grab liquidity up here. That's what it's trying to do. But for me, I don't jump into a sluggish market. Okay. So you expect this guy to rally it up. So I don't, so most time once this is 1, 2, this is the main break now. Right. So I don't go into market that's not showing me a clearer move. Let's look at this. Then we're having the same thing here, turning back to this point. At the 5, I think 5 is long overdue for up, but still want to come down to retest this point before continuing up. It can be very slow, but you can invariably say that this market to go up as much as possible eventually. Okay, I have returned to test this before coming up. 20. Okay, 20 with the channel broke this key level liquidity area. So this guy is going to come down, probably grab this liquidity or here before returning up as well. Continue with this channel. You can see it still got supported. They can look down, continue going up. 40. Amazing. 40 continue up move. This was a resistance at and liquidity area. Got broken, retested. You can see retest, continue. So that means I had an agenda with this key level. Alex, can I jump in? Well, you have to wait for a pullback or good pullback. But this kind of market that is causing displacement this way, I would rather not want to go in there because it can flap down. You come and retest this point. Get it? That's one of the things you have to be careful. Right, so let's look at 60. All right, so 60 have close an upturn. Start this, I think this is a major pullback, so it should be going up. So let's look at 10 minutes, 5 minutes. 5 minutes, I want this guy to close bullish. Then I will be buying, put my stop loss here. Okay, let's be buying from here. Stop loss perhaps even below this. I take profit targeting this top here. So let's go to 80. Okay, wow, it's amazing. All right, so here is this. This is a pullback. This low need to be taken out for you to say, okay, but this is, for instance, your potential resistance. Remember what you normally do. This now has failed. So having failed, you want this to be taken out before you can buy, you find an entry. 99. Amazing. So the same thing, this guy. Oh. After we sold here, got supported. That was yesterday. That was amazing. Super, super. Let's get your trend line. 50, 200. Amazing. That was super. That was super. So because understand your structure, then this will aid you. That's all what you need. So the same thing on, right? So let's go here. Wow, miss this market. So the same thing here. Okay, let's go to 4 hours. All right, so this is a key level. So wow, wow, this is a key level. So this is 4 hours, and so is it in consonant? So there are so many touch points there where the market got rejected. So once you have seen the rejection, then you want to go to a lower time frame to find an entry. Let's go to 15 minutes first, right? So, but this rejection, nice. This is already. Let's look at divergence here. Can you see divergence? So, what is divergence? Marketing the price creating higher high, why the momentum creating lower low. So this is a bearish divergence. The bullish divergence, higher high from the okay. So ordinarily you will have been in when it broke this, but nevertheless, let's watch what happened. Then we're gonna find an entry this. To go back to the 15 minute. Okay. So if you want to short, you can short and targeting here, here, here. So I'm going to short this market and targeting some of those regions. Yes, you heard me right. So that's why sometimes you see me do this, say like this short. Following or short, 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 short. Right? You can take off all of this. So time permit, I take it down to the key level. So, but the whole ideology is that the first take profit will have to be favor the second one and all of that. So I now go here to click on copy image, go to my Signal Forum system, synthetic page. Just go to my private mentorship, synthetic. So it's going to sell down. That's what you do. The boom and crash. Amazing. Popped up here. I look at the liquidity graph, sold down. Now that would have been a very fantastic entry. This one, you expect to return back to the key level and then pump from there. That's exactly how we do this. Amazing. So the trade we entered previously is now in profit on Forex. Look at it. We're in $29 profit right now. At the moment you get here. So if I want to adjust my stop, I'll take profit and go ahead, turn back there. Sometimes you can even carry to drag it to 20, 30, or 47. Right? So the profit is Ganusi. Right? The profit is Ganusi. This is a liquidity error. This is a liquidity. Profit is Ganusi. Do you know the meaning of Ganusi? Right. So that's how trading is. So face yourself. With yourself, you can see market return back to this 250 moving average and bounce from there. So even from here to here, we have been in profit. So let's go to 5 minutes to see it. So remember what I told you, when 5 minute move and then give me a engulfing candle, then I'm jumping in and all of that. And now when you get here, you take profits. That's already a good profit for you. Okay? So you can see Bitcoin now. So we saw Ethereum. Okay, Ethereum is still dialing. You see Bitcoin, right? Solana. Okay, we'll talk about this guy that we want it to come down, and we'll find in a buy position. So, ladies and gentlemen, that's how you trade this market. So fantastic. You don't need to give yourself unnecessary stress. Just for you to be patient and let the setup come to you, and then you take advantage of the market based on the setup. Here is a summary for you guys to pay attention or review your setup and then collect your money. Right? Make sense? Yeah. So let's go to that AT of this guy where trade we're checking. All right. So we check two. What do we say about two? Okay. So it's going to sell down to this point. Yeah. Something like that. So let's do about three. All right. Three is still dialing. So you remember I told you don't struggle yourself with any market. Once it's not set up, it's not fun, it's not fantastic, just abandon it and face one that's fantastic. And this one I will say pull back to continue moving up. So pull back is obvious coming down to this point before continue going up. Yeah, so it was 20. Yeah, okay, so 20. Good. So 20, what do we say about 20? Okay, it has found a support. Then it's going to continue because I have an agenda to hit this point. So that means for anyone, because this is already some 5, and then so finding an entry, for instance, here after this candle. So okay, let's even say here, stop loss below here. So to this point, is it up to 1:2? Yes, up to 1:2. So fantastic. You're okay. Yeah, so that's what it is. So let's check 40. Okay, so 40 is pull back for continue. Where's the key level? Very, very up here. 60. Okay, what do we say about this guy? Forgotten what we say. Right? 99. 80. Okay, so we said rejection here. Take out this low before we find an entry. Very, very important. Now, if you return back to this guy, So this guy is selling very well right now. Can you see? So that's because what's a bearish divergence. So what you use indicator for is far from what people use indicator for. Use indicator for different purposes. So you don't use to form when to find a trade or when to, so when the indicator move like this, I end it. No, use it for a confluence. That's exactly what you're doing. Make sense? So if we go to our gold now, look, our gold should be on some profit. We're on $46 profit on gold. You heard me right? $46 profit on gold. Here is it, $48. It's $48 profit on gold. $52 profit on gold. So if you enter two positions, can take one now and allow the other one to run. For instance, here, see what you do now. For instance, what I like this, guys, is you can take what is called, look at what it say, take partial profit. So we'll now see 0.03. 0.03. Can you see? So 0.03. Some had been taken, right? So 0.03 part has been taken. Now, another thing I can even do is this. I can now move trailing stop loss, probably above this point, maybe 20, 30, 26, right? So let's go. Go here. So stop loss, 30, 26, 30, 26. So click OK, and you allow it to run. Very simple. That's how you trade. Very simple. So I've collected some profit. The other one is running, and I've go above my stop, my entry, so that if it's going to go banana, I won't be in problem. So let's see 27. So I'm good, right? Very simple. So that's how you trade. This is how you trade. Don't disturb yourself. Just face what matters. Build up on it. Then you're going to be fine. That's how trading works. All right. Thank you. Please learn more. Thank you. Have a nice time.